Institute of International Finance, IIF. That's what it says.
Hey guys, how's everyone doing? It's Wednesday, 10 a.m. Secretary Bessent will be speaking today. We're going to live stream that and give you some instant analysis around that. Right now, they're doing the introduction. Just to frame it up for you. So we've had a significant rally, gap up open after Trump shared some remarks after the SEC Chair Paul Atkins was officially kind of inaugurating his role, saying that they would lower tariffs in China. We saw some follow-up news around that this morning, and he would not terminate Chair Powell. I think the view on Twitter is that Trump folded. I don't see that view, actually. I think Trump is softening on China. That's one for China. But the tone towards the European Union is still harsh. And tariffs are still a core to the economic philosophy. So really interesting times. Let's go to the live stream. Joined by people on my team, including Shakara, head of research, and Jacob, head of trading. So we'll provide some live analysis here, at least over the next 30 minutes or so. All right. Then I'll be heading to Austin, Texas, in case anyone's around. Shoot me a note. I'll be there till Friday afternoon. All right. Let's go to the live stream.
Shortly after. Secretary Bessent, the stage is yours.
Here we go. Guys, for the audio.
Yeah, you're actually a bit behind, Ron.
Good, and thank you. Excuse me. Good, and thank you for that kind introduction. It's an honor to be here. In the final months of World War II, Western leaders convened the greatest economic minds of their generation. Their task, to build a new financial system. At a quiet resort high up in the mountains of New Hampshire, they laid the foundation for Pax Americana. The architects of Bretton Woods recognized that a global economy required global coordination. To encourage that coordination, they created the IMF and the World Bank. These twin institutions were born after a period of intense geopolitical and economic volatility. The purpose of the IMF and the World Bank was to better align national interests with international order, thereby bringing stability to an unstable world. In short, their purpose was to restore and preserve balance. This remains the purpose of the Bretton Woods institutions. Yet everywhere we look across the international system today, we see imbalance. The good news, it doesn't have to be this way. My goal this morning is to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it. I have spent the bulk of my career from the outside
no trade wins, no trade deals
on financial policy circles. Now I am on the inside looking out. I am eager to work with each of you to restore order to the international system. To achieve this, however, we must first reconstruct the IMF and World Bank reconnect the IMF and the World Bank with their founding missions. The IMF and World Bank have enduring value, but mission creep has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. Bringing balance back to global finance will require clear-eyed leadership from the IMF and World Bank. This morning, I will explain how they can provide that leadership to build safer, stronger, and more prosperous economies all around the world. I wish to invite my international counterparts to join us in working toward these goals. On this point, I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system. Nowhere is the imbalance I mentioned earlier more obvious than in the world of trade. That's why the United States is taking action now to rebalance global commerce. For decades, successive administrations relied on faulty assumptions that our trading partners would implement policies that would drive a balanced global economy. Instead, we face the stark reality of large and persistent US deficits as a result of an unfair trading system. Intentional policy choices by other countries have hollowed out America's manufacturing sector and undermined our critical supply chains, putting our national and economic security at risk. President Trump has taken strong actions to address these imbalances and the negative impacts they have on Americans. The status quo of large and persistent imbalances is not sustainable. It is not sustainable for the United States, and ultimately, it is not sustainable for other economies. Now, I know sustainability is a popular term around here, but I'm not talking about climate change or carbon footprints. I'm talking about economic and financial stability, the kind of sustainability that raises standards of living and keeps markets afloat. International financial institutions must be singularly focused on upholding this kind of sustainability if they are to succeed in their missions. In response to President Trump's tariff announcements, more than 100 countries have approached us, wanting to help rebalance global trade. These countries have responded openly and positively to the president's actions to create a more balanced international system. We are engaged in meaningful discussions and look forward to talking with others. China in particular is in need of a rebalancing. Recent data shows the Chinese economy tilting even further away from consumption toward manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs. Of course, trade is not the only factor in broader global economic imbalances. The persistent over-reliance on the United States for demand is resulting in an ever more unbalanced global economy. Some countries' policies encourage excess savings, which holds back private sector-led growth. Others keep wages artificially depressed, which also suppresses growth. These practices contribute to global dependence on US demand to spur growth. They also lead to a global economy that is weaker and more vulnerable than it should be. In Europe, former ECB President Mario Draghi has identified several sources of stagnation, and he has outlined several recommendations to get the European economy back on the right track. European countries would do well to take his recommendations to heart. Europe has already taken some long overdue initial steps that I applaud. These steps create a new source of global demand and also involve Europe stepping up on the security front. I believe global economic relationships should come to reflect security partnerships. Security partners are more likely to have compatible economies structured for mutually beneficial trade. If the United States continues offering security guarantees and open markets, then our allies must step up with stronger commitments to shared defense. The initial actions from Europe on increased fiscal and defense spending are proof that the Trump administration's policies are indeed working. The Trump administration and the US Treasury are committed to maintaining and expanding US economic leadership in the world. This is especially true at the international financial institutions. The IMF and World Bank serve critical roles in the international system, and the Trump administration is eager to work with them so long as they can stay true to their missions. And under the status quo, they are falling short. The Bretton Woods institutions must step back from their sprawling and unfocused agendas, which have stifled their ability to deliver on their core mandates. Going forward, the Trump administration will leverage US leadership and influence at these institutions and push them to accomplish their very important mandates. The United States will also demand that the management and staffs of these institutions be accountable for demonstrating real progress. I invite all of you to join us in working to refocus these institutions on their core missions. It is in our collective interest to do so. The IMF. First, we must make the IMF again. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. These are crucially important functions to support the US and global economies. Instead, the IMF has suffered from mission creep. The IMF was once unwavering in its mission of promoting global monetary cooperation and financial stability. Now it devotes disproportionate time and resources to work on climate change, gender, and social issues. These issues are not the IMF's mission. And the IMF's focus in these areas is crowding out its work on critical macroeconomic issues. The IMF must be a brutal truth teller and not just to some members. Today, the IMF has been whistling past the graveyard. Its 2024 external sector report was entitled Imbalances Receding. This Pollyannish outlook is symptomatic of an institution more dedicated to preserving the status quo than answering the hard questions. Here in the United States, we know we need to get our fiscal house in order. The last administration ran up the largest peacetime deficit in our nation's history. The current administration is committed to fixing this. We are open to critique, but we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries. The IMF.
You're on mute, Trump. Sorry.
Say markets are below their opening gap up. So far, sell the news. There's really a nothing burger thus far. It's oriented around IMF and World Bank reform. We'll keep listening here. But there's
A lot of China. A lot of China as well.
Right. Exactly. A lot about China reform too, but nothing burger. And markets expected more than a nothing burger. So you're going to see a sell-off now, and that's happening.
Yeah, I agree.
To push more proactively official bilateral lenders to come to the table early to work with borrower countries to minimize periods of debt distress. The IMF must refocus its lending on addressing balance of payment problems, and its lending should be temporary. When done responsibly, IMF lending is at the very core of its contribution to the global economy. When markets fail, the IMF steps in and makes resources available. In exchange, countries implement economic reforms to resolve their balance of payments issues and support economic growth. The reforms undertaken during these programs are some of the IMF's most important contributions to a strong, sustainable, and balanced global economy. Argentina is a fitting example. I was in Argentina earlier this month to demonstrate the United States support for the IMF efforts to help the country reset financially. Argentina deserves the IMF support because the country is making real progress toward meeting financial benchmarks, but not every country is so deserving. The IMF must hold countries accountable for implementing economic reforms, and sometimes the IMF needs to say no. The organization has no obligation to lend to countries that fail to implement reforms. Economic stability and growth should be the markers of the IMF's success, not how much money the institution lends out. World Bank. Like the IMF, the World Bank must be made fit for purpose again. The World Bank Group helps developing countries grow their economies, reduce poverty, increase private investment support, private sector job creation, and reduce dependence on foreign aid. It offers transparent and affordable long-term financing for countries to invest in their own development priorities. The bank, along with the fund, provides extensive technical support to promote debt sustainability among low-income countries, which empowers those countries to stand up.
This is a big
commercial
nothing
and
burger.
opaque
None of this
lending terms
is going to change
from
massive
other
global
creditors.
capital flows.
These core functions
Not
of the
addressing
World
Europe,
Bank complement
Japan,
the Trump
Mexico, Canada.
administration's
It's
effort
all about small
to
emerging market
foster
economies.
safer,
And none
stronger,
of this really
and more
matters.
prosperous economies in the
Overbought
United
conditions
States
gonna let it
and the world.
sold off now.
But the bank, like the IMF, has strayed in certain respects from its initial mission. The bank should no longer expect blank checks for vapid, buzzword-centric marketing accompanied by.
So, like, I think we get the main headlines here. Just by way of background, so he cited Bretton Woods. Bretton Woods was a conference that really advanced U.S. dollar hegemony. It's when the U.S. stepped out of World War II and said, "Hey, we're going to create this these international organizations led by the United States, domiciled in the United States, IMF and World Bank." IMF focuses on balance of payments, and if you have like a monetary collapse like the Thai baht in the 1990s or the Mexican peso collapse, the IMF will step in with a package and attempt to stabilize in exchange for reforms. The World Bank is more focused on development. They'll provide loans, technical expertise on different industries to help small countries grow. They're like the best practices. It's like hey, if you want to rent Bessent U.S. Treasury Secretary thought processes, I'm simplifying, right? Then you go to the World Bank. They'll help you run a better economy. They'll teach you about property rights and capital markets and what better regulations are. So both of those institutions export the so-called neoliberal kind of order, right? And that's what he's critiquing. He's saying, hey, well, one, he's actually saying they got to refocus on the core mission. So he's legitimating them. He's saying they got to de-scope mission creep, citing things like environment and DEI. And he's really dialed in around balance of payments and saying that these countries, especially China, have to have more consumer-led economies as opposed to export-led economies. So that's a quick recap here. Thoughts?
Yeah, I think he also mentioned about the World Bank not lending to countries that do not bring in reforms. That's one of the things that he mentioned, and I agree with your point on him saying that I'm targeting China specifically and talking about them being an export-centered economy rather than providing for their own consumers, which is actually true.
Yeah, well, China knows this, but he's mentioned that too. Like China's
Of course.
trying to get more consumptive domestic demand, and the funny thing about it, talks about these countries that are export driven have excess savings. That excess savings is financing U.S. fiscal deficits. That excess savings is finding its home to finance U.S. borrowing and U.S. investment. So there's a trade-off there. You want to lower long-term interest rates, you need excess savings. So which of these two is the priority? They both can't be the priority. There's a trade-off. He talked about discouraging, competitive exchange rate manipulations. Well, look, the U.S. dollar is pretty low right now.
Yep.
I think Americans probably want a devaluation of other currencies, so it's cheaper to buy from abroad and you can travel better. There's a lot of conflicts in what's being stated here. Markets, Jacob, what's the market response?
But now it's kind of a nothing burger. It's just basing on some 5-minute EMAs, deciding whether or not it wants to go higher or lower. Hasn't really made a move yet. Although I'd assume if it's a nothing burger, then the overbought conditions give way for a sell-off here into the end of the day. But
okay. So yeah, are we below the opening gap up or no?
No, we're not. Not in this SPY at least. I'm not looking at NASDAQ.
Gotcha. And then how about rates and treasuries? So treasury yields
Treasuries are rallying or dumping. I guess the yields are rallying.
So bonds have a bid, is that right?
No, that'd be the opposite. They're dumping.
It'll be the opposite, yeah.
I see 4.3%, at least on my screen here. 4.29.
Right, from the open though, right?
Oh, got it. From the open. And then how about the dollar? How about the dollar response?
Yeah, so the dollar is up 18 pips, kind of flat. Nothing there. Yeah.
Yeah, mostly nothing burger, right? Kind of across the board. People still waiting for him to wrap up his speech. Let's get back into it, see what else he has to say.
Half-hearted commitments to reform. As the bank returns to its core mission, it must use its resources as efficiently and effectively as possible. And it must do so in ways that demonstrate tangible values for all member countries. The bank can use its resources more efficiently now by focusing on increasing energy access. Business leaders the world over identify unreliable power supply as one of the primary impediments to investment. The World Bank and African Development Bank's Joint Mission 300 initiative to expand energy access to 300 million more people in Africa is a welcome effort. But the World Bank must respond to countries' energy priorities and needs and focus on dependable technologies that can sustain economic growth rather than seek to meet distortionary climate finance targets.
Buy back to the highs.
We applaud the recent announcement that the World Bank.
Say again?
It SPY's back to the highs.
Yep.
Okay.
Will seek to remove prohibitions on support for nuclear energy, which could revolutionize energy supply for many emerging markets. We encourage the bank to go further in giving countries access to all technologies that can provide affordable baseload generation. The World Bank must be tech neutral and prioritize affordability in energy investment. In most cases, this means investing in gas and other fossil fuel-based energy production. In other cases, this may mean investing in renewable energy coupled with systems to help manage the intermittency of wind and solar. The history of humanity teaches a simple lesson. Energy abundance sparks economic abundance. That's why the bank should encourage an all-of-the-above approach to energy development. Such an approach will make World Bank financing more effective, and it will reconnect the bank to its core mission of economic growth and poverty alleviation. In addition to increasing energy access, the World Bank can use its resources more effectively by starting to apply its graduation policy. This would allow the bank to focus on lending to poorer, less creditworthy countries. This is where World Bank support makes the biggest difference for poverty and growth. Instead, the World Bank continues to lend every year to countries that have met the criteria to graduate from World Bank borrowing. There is no justification for this continued lending. It siphons off resources from higher priorities and crowds out the development of private markets. It also disincentivizes countries' efforts to move away from dependency on the World Bank and toward job-rich, private sector-led growth. Going forward, the bank must set firm graduation timelines for countries that have long since met the graduation criteria. Treating China, the second largest country in the world, as a developing country is absurd. While it has been at the expense of many Western markets, China's rise has been rapid and impressive. If China wants to play a role in the global economy commensurate with its actual importance, then the country needs to graduate up. We welcome that. The World Bank should also implement transparent procurement policies based on best value. It must help countries move away from procurement approaches that prioritize only the lowest cost bids. Such procurement policies reward distortive and subsidized industrial policies that undermine development. They may also stifle the private sector and incentivize corruption and collusion and result in greater long-term costs. Procurement policies based on best value are better from both an efficiency and development perspective, and their robust implementation will benefit the bank and its shareholders. Related to this subject, I wish to send a strong, and I emphasize strong, message about procurement policies as regards Ukraine. No one who financed or supplied the Russian war machine will be eligible for funds earmarked for Ukraine's reconstruction. No one. To conclude, I invite our allies to work with us as we rebalance the international financial system, refocus the IMF and World Bank on their founding charters. America First means we are doubling down on our engagement with the international economic system, including at the IMF and the World Bank. A more sustainable economic system will be one that better serves the interests of the United States and all the other participants in the system. We look forward to working with all of you in this endeavor. Thank you.
All right, so those are the remarks. I think overall, it was really a focus on a reform message for the IMF and the World Bank, staying core to their original mission. There was really some kind of technical feedback to them around awarding more on best value versus lowest cost bids. I'm not sure it's a great use of time to kind of get into all of that. There were some interesting comments he made along the way, though. He gave a shout out to Mario Draghi, which is an olive branch to Europe. And he said, quote, "Europe has taken long overdue initial steps that I applaud," end quote. Now that's different than what Trump said last night, by the way. He said the EU was formed to take advantage of the United States. So there's some daylight and inconsistent messaging between the two. He did say our allies must step up for a shared defense. Initial actions from Europe are proof that Trump admin policies are working. And maybe like a third of the content was around China, right?
Right.
China, a rebalance. So markets went back up near to the intraday highs. I mean, it's kind of like a Fed day today, right? Things go up, things go down in a short period of time. As people try to figure out what's happening, what people are saying.
Yeah, they sold the news, but I think they got back up.
Yeah.
Not over yet because they go sit down after this. We're kind of behind.
Right.
Still talking. Like the market will digest. We'll finish. Let them finish talking. They'll digest and then they'll decide.
Right.
Yep. He said the IMF's got to refocus on balance of payments issues. He called out Argentina as a case study. Thing is, Argentina is a small economy. It's, what really matters is big economies, trade balance, the flows, and their focus. And this is not about that. This is all about very small emerging market economies. It's not going to change GDP outlooks for the United States. I think it was underwhelming from that perspective. Just from a market's expectations perspective. It was, I don't know. I'm not so convinced markets will respond well. It's like a kind of like a neutral at best story here.
Yeah. I mean, honestly, this was possibly a textbook speech that just talks about everything and does not give any concrete information on where things are going. We already know everything. The countries know what they're trying to do. So I don't know. There's value here in terms of what he said, right?
Yeah, he did say this line: "No one that finances a Russian war machine will receive funds."
Yeah.
I don't think Trump would say that. I don't think Trump would say Russian war machine, right? There are a couple sentences you can see as it relates to how he talks about Europe and Russia. There's a bit different. Now in China, he's fairly similar with Trump, right? Trump last night said he will, quote, play nice with China. They'll work out a deal. So there was a shift there.
Headline is there's opportunity for a big deal between U.S. and China. 5 minutes ago.
Yeah.
How's China reacting right now? Let's take a look at the FXI.
Well, it'll help is an intraday chart by Jacob, which will show us the reaction from the
They're up
speech.
2%, but they faded the highs.
Yeah.
Right, they're up from the morning though. There's a comment in a Telegram group. Quote: "It's lovely to have a speech that was boring and not massively market moving. This used to be business as usual. Now it's the exception." I agree. I like that. Like, why are we all here? We're like waiting for Bessent to, announce something big. So,
Yeah, America first does not mean America alone. That's what it says.
yeah, and that's more conciliatory messaging.
Right.
Yeah.
From Bessent the benevolent, right?
Which we expect, right? Letnick Navarro comes on and tells us they want the world to burn.
Right. And this speech was drafted last week and reviewed 2 days ago when markets were in the red. So they wanted more of a conciliatory message. So if markets were down, let's say yesterday and today, this would have helped markets, right? But they're already up. So relative to where they are today, it's just not much new information here.
Markets are now setting intraday highs.
Right, we're at
plus 3.52.
Yeah, plus 3.52. The VIX is at 27, down about 10%. Broke out to new intraday highs. Well, let's see how it plays out. Bitcoin up 2%.
Yep.
Somewhat below intraday highs, but above that kind of morning gap. And then European markets were up just on the day, still up. Germany kind of off the highs, up 1.7%. France off the highs, actually finishing near the lower end of their days, actually. So I'll show you see what I'm looking at here. Right. So Germany and really Europe has recovered faster than the United States. Germany has no concept that there's a correction or a bear market.
Right.
Yeah.
Totally different experience, right? Because Europeans are rotating their asset allocation back home. So they have no idea that there's a correction in the United States. I mean, they do, obviously. I mean, but just in terms of their own asset prices, right? France kind of looks like a weak finish today. Mexico, so far so good, strong finish. Kind of overextended, but seems like an obvious winner here. All the trade news around and tariff news around Mexico is mostly in the past. And then China up 2.3%. So all the news the last few days is beneficial to China.
Right.
So tariffs are coming down.
Yeah.
So go ahead.
But White House also said that China levy changes that they talked about in the morning, cutting down tariffs, wouldn't be unilateral. So they're expecting them also to make cuts in their tariffs, in the reciprocal tariffs. So that's what they're trying to say.
Yep. Yeah, China is slow walking this. I mean, they haven't responded with a proposal. Trump last night said he'd like to see a proposal from China and we'll get resolution. And if we don't, he'll just set the terms, which might be just a lower tariff level. So resolution is coming, but he wants China to engage.
Sounds like he was like basically dropping him back down to like 50 to 60% is like a sign of good faith. Like, hey, let's go to the table. You know, China wants respect ultimately, right?
Right, and Bessent mentioned the word respect. Also, he said, "America first does not mean America alone."
Yeah.
And then later, quote, "mutual collaboration and respect." So he's using the language that the Chinese want to hear, and that the Europeans want to hear. And I think you mentioned earlier that Europe hasn't given up on their relationship with the United States.
Yeah, the commissioner said that.
The commissioner said that. That's pretty strong language, by the way. What does that mean? Give up the relationship? That's, interesting times.
Yeah, my thought is this: the administration is trying really hard to soothe the tariff fears that are there in the markets that have caused the sell-off here. So in the past couple of days, we've seen that from Trump yesterday and now from Bessent. They're trying to soothe the fears and possibly make us look on the brighter side, or something like that.
Yeah, I'm not too encouraged by this talk.
Yeah.
I think it's kind of going flat. There's, tariffs are here. We still don't have clarity on what the end state of tariffs will look like. We know that there's 18 proposals on the table from a couple dozen countries. It's hard for analysts to forecast earnings. It's hard for CEOs to make decisions around CapEx, hiring. The sentiment surveys are still weak. And this speech didn't address that. It's acknowledging that it's important to get stuff done, which we know, they know, everyone knows that. So yeah, I'm not terribly excited from like a risk on perspective from this. It's but so far, we got a gap up that's holding. If it holds, that's very encouraging, right, Jacob? Do you want to double click on that?
Yeah, technically the gap up holds. It's like it gets defined as a breakaway gap, and it just has a higher probability of having upside continuation.
So that's like the number one thing to watch today left, right?
Right.
We'll keep an eye on that.
And you want a good candle too, by the way. You want the gap to hold, and you also want the candle to look constructive. You don't want it to like finish with like a inverted hammer.
Yep. Let's go to your screen in a moment that we can talk about that too. So, so far, what's working? SMCI, China linked, right? This was the alleged fraud, according to Hindenburg, up 11%. China linked name. Palantir, Westinghouse, Quanta Services, some AI theme ideas.
Right.
Retail trading ideas too, really. SMCI and Palantir and Vistra, which is a kind of a nuclear energy play. AMD, Tesla. This is all retail trading, really. A lot of this is ServiceNow, CrowdStrike, right?
All the popular kids in the market.
The popular kids amongst retail traders on Twitter, basically.
Right.
Yes, right. And then on the losers, you have solar. That makes sense, right? Enphase Energy is down 10% because they would benefit from steep tariffs on China solar. These are real companies. Real companies are down. Not that these ones on the left aren't real companies. I mean, kind of like old school companies that institutional investors like.
Right. Lower beta and
Yeah, like Kimberly Clark, Consumer Staples, Bristol Myers Squibb, Healthcare Pharma, CME Group.
also,
yeah,
it's also good to see that defensive plays are lagging today. Like Staples is underperforming, utilities is underperforming, healthcare even.
yeah, that's classic risk on, right?
Yeah, that is.
Defensives are selling off. People are rotating from staples to technology and discretionary. Tesla reported last night. The numbers were terrible. It didn't really matter. Trump's speech, by the way, happened shortly after Tesla earnings. Incredible gift to Tesla. In fact, Tesla went up really further after that. I can see where Tesla is right now. The trailing and forward PEs for Tesla went up because analysts revised down earnings estimates. So the stock got more expensive.
Right.
Net with net
At this
incomes down 71%. Yeah, go ahead, Jacob.
I was just gonna say at this point, the entire valuation is based on speculative cash flows from their robotaxi and their Optimus. You know.
Right.
Is it robot actually like from last year? They delayed it from August last year till October, and then it's been delayed for the next year as well.
Yeah, that's
Yep.
that's Elon's playbook.
Yep. NASDAQ 92 winners to 9 losers. That's strong. That's a strong upside day. That's a key ratio also. AppLovin, high beta, basically high beta name software. Warner Brothers is kind of interesting to see, actually, right? Warner Brothers is kind of the odd one out. I guess it's become a trading stock, but that's the one that doesn't fit the group. ARM, again, like data center ideas, Global Foundries. It's a competitor of TSM, the Trade Desk, high beta.
Yeah.
Axon, popular retail stocks once again. Then in the losers, things like Baker Hughes. Looks like a Coca-Cola bottler in Europe. Staples, Keurig, Dr. Pepper. They make the kind of instant coffee, and again, another consumer staple. So Mondelez, Pepsi, lagging. The sectors that are up are the ones that have been down the most over the last 2 months. Also worth noting, right? The sectors that
makes sense.
Are down that have been laggards. Energy acting weak. Crude oil is lower also, which is there's a mismatch between these two, right? Crude oil is lower, suggests more global weakening, not global strengthening, right? So I think this is like a lot of retail trades. The liquidity is thin. Liquidity is thin out there. So retail traders are having a lot of fun, is what this looks like. Any other thoughts? See questions?
Nothing at the moment. I think we just have to watch the markets and see how they react. They've been holding up pretty well since the gap up today.
Yep, I agree. That's one thing to watch to see.
Yeah.
Can they hang in there? Obviously, the volatility is at 28. The VIX. It's at COVID levels of volatility. It's really been for like 2 months. Very rare to see that. Very rare to see that for such a long period of time. Names in the Russell, and Russell's up 3.6%. A lot of hedge funds have shorts in this category in the Russell. These are businesses. Go ahead.
Yeah. Sorry, I was just calling out a quote from Bessent. He just said that Wall Street's going to do fine, but I think it's Main Street's turn to share in the prosperity. I think this is something that he said earlier as well. So they're counting on Main Street and trying to.
Yeah, I mean, he said like last month, hey, it's Wall Street's turn. Now it's Main Street's turn. Now he's shifting it. He's like saying, hey, it's Wall Street's turn, and Wall Street will still do fine.
Yeah.
And it's also Main Street's turn. There will be no cost to anything we're doing.
Yeah. Sorry, you were saying about.
No, just look at the IWM. You see some of the names that are up there. These names are heavily shorted names, by the way. I recognize these names. You see a lot of biotech stocks, quantum computing stocks. This is animal spirits, right? QBTS is like an animal spirits idea. So it's really, I think, mostly short squeeze is what I see here.
Yeah, when animal spirits get sold off the most, they also rally the hardest.
Exactly. And the animal spirits rally usually lasts like 1 to 2 days. They're short, furious rallies. And on the right-hand side, you see what's been selling off. PennyMac, some banks. There's some pharma and some biotech. But they're more, there's some more real businesses on the right-hand side, utilities. So I think that's more of like what institutions are doing here. Now the indices are coming off from the all-time highs. Dealers are having a lot of fun faking people out, just like a Fed day, right? So looks like we're just in a big range right now. I mean, the range is massive, 2.7% to 3.5%. That's a signal of 80 bips.
The VIX is lower than it has been last couple of weeks, but still elevated. So it makes sense, right?
Yep. Yeah. So do you guys keep tabs on junk bond yields? Well, they've increased. We haven't seen defaults increase, but if you look at the high yield market right here, you can see big tightening. Look at that, big tightening in one day in the high yield bond market. That's
Right.
impressive. That's an incredible move. Matching what we saw in equities, but it's largely erased, the trauma really from the last 2 months. Is the gold trade cooked? I think it's a question of time frame. Short term, it's not looking good for gold, right? The chart doesn't look good, right? What would you say, Jacob?
I'm looking more at the weekly candle. The weekly candle on gold is terrible. I think.
Yeah. Sure, your screen. Take a look. Yeah. While you're pulling that up, what's the most important chart? The 10-year, yes. VIX, yes. Dollar, yes. QQQ, yes. NVIDIA, yes. Yes.
Can you see my screen?
Versus defensives, yes. Go ahead. There we go.
So this weekly candle, this is like a huge bullish exhaustion here, right? So my thought would be that the gold trade is over or very close to over, although on a shorter time frame, you can see it kind of basing here. So I could see it doing something like retesting and then distributing and then starting to head lower, right?
There's a central bank bid for gold. Like there is a fundamental bid for gold from central banks. But it is overbought short term, right? And the ETF flows for gold are pretty strong. And now maybe there's a rotation from gold to Bitcoin, right? We saw Bitcoin rally just as gold was selling off.
Yeah, Bitcoin's like short term overbought, but the way I see Bitcoin is it just broke out pretty handedly, and so you're going to want to follow its trend up with these EMAs right here. Yeah, so this is a massive wedge breakout.
Yep. Yeah, the credit markets right now are leading the equity markets in terms of that price recovery. I was thinking about that high yield chart. The high yield has essentially erased the vast majority of the damage in the last 2 weeks, but equities have not yet, right? There's a mismatch there. Mm-hmm. I think a lot of this, though, is really just short covering. I really do. I think it's, we haven't seen institutions wade into the water yet. Yeah. It's a thin market.
So on the bullish side with the SP 500, what you see is what bulls wanted to see and they got was a higher low right here at the August 5th lows, and then follow through day, and then today was like a wedge pop underneath the EMAs, right? And now what you want to see if you're a bull is you want to see it like kind of normalize in this range the next couple days.
All right.
That,
So what's
that
the
way you can break
so you
out
can
here.
get some give back, but what level do you not want to see breached?
This level right here, 539, 540. You don't really want to see that. It lose that and head back down here.
So S&P 5400 then, and we're at 5452 right now. You want to see that hold?
I can pull up SPX. Right. So SPX is like, yeah, what you really want to see is this hold right here, which is 5400.
I think the other thing you want to see on the fundamental side is analysts stop revising down earnings estimates. Right. Earnings by and large have come in good this week. Earnings have been great.
Right.
The past is the past though, right? But those earnings are generating January, February, and March.
And they're dependent upon like tariffs, right? So every single time the tariff news gets changed, the sell side analysts have to go in and recalculate over and over.
Right. So what's risky here is the guidance that companies are giving. And not a lot of companies have given guidance for the next few quarters. That's something that we looked at in the morning as well. Only 8 companies that have reported till now have given forward guidance. And they're also been very cautious, and they're definitely below consensus guidance. So that's something that all of the companies' management are being cautious about. But definitely the earnings have been much more positive than negative, I would say.
Yeah, we haven't really seen weakness in the hard data yet. We see awfulness in all of the soft data consistently. Right. So prices paid, expectations for manufacturers, which means inflation, going up, prices received, dropping. That came out this morning. Consumer surveys, CEO confidence. So the soft data is still atrocious, but the hard data is still holding up. Tomorrow morning we'll get initial claims. Initial claims held up fine, So we haven't seen the translation of bad soft data to hard data. We have heard reports of companies being impacted by these tariffs and changes. And that, of course, is, I think, what's forcing Trump to pivot on China. If he doesn't, you're going to see liquidation in small businesses that are importing from China. The big businesses can adapt. They'll push the cost as much as possible onto their suppliers and then the consumer.
Right. I mean, not to forget also that hedge funds have a really high gross long. What we see right now may be just then covering the shorts that they have on the net now, right? So that's where we might be in terms of that.
Yeah, I mean, this is like the opposite of panic selling. This is panic buying, what we see today.
Panic buying. Yeah.
This is panic buying.
Typical FOMO play, like FOMO trades.
Yeah. This is panic buying. Usually panic selling is not a good idea, and panic buying isn't a good idea. Energy is now negative. Staples are flat. And indices have gone nowhere. They're back in the middle of their range. So yeah, there's a big tug of war playing out right now. Gold down 2.8%. Oil down 2%. I like looking at oil because oil prices aren't driven by traders on Twitter. There's more fundamentals, more institutions. You want to see oil firming if you believe in global growth, right?
Not exactly what we're seeing, though. We're seeing kind of it rolling over right here, right?
Yep. Yeah. Let's see. What's leading right now is U.S., Mexico. That's what's leading a strong relief rally after kind of lagging for 2 months or so, right?
Yeah.
So, well, I think we can call it a wrap there. Hopefully that was fun. Hopefully if that was helpful, folks. Let us know. We can try to do these again when there's some live content. All right, I'm sure there will be plenty of those opportunities in the future. It's nonstop. All right, make it a great day. Again, if anyone's in Austin, Texas, give me a holler. I'll be there this afternoon through Friday afternoon. There's a conference called the Olivion Conference. So I'm looking forward to attending that. All right, be well. Have a good one. Take care.
Take care, guys.
Take care.
Cheers.